What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Salesforce with the ticker symbol CRM. This was a viewer's request, and thank you for your donation. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at CRM. I have not looked at this chart in a long time, so this is also my first impression. And looking at the charts in the first few seconds, it looks like there was a nice uptrend with some wide swings, and now it looks like we're struggling to make a new high. So we have come back down to the prior low. Price is finding some temporary support, but is that enough to reverse the price, or are we gonna just roll over down? So we had higher highs, higher lows, and then we came back down quite a bit. We could have started a new high, but it failed. So basically, we came back down to the prior low. So seeing a small bounce. Is that small bounce going to lead to the higher prices, or is it going to lead to another lower high to see price roll over? A lower high, we get another lower high, and then we roll over. So let's go and analyze the price chart. And when we analyze the price chart, we don't want to be a bull. We don't want to be a bear. We just want to be a market participant. We let the market decide for us what to be. We want our beliefs to align with the market. We don't want to you know, give our beliefs to the market. We want to align with the market's belief. So let's see. Let's go and mark the obvious levels. All-time highs are always obvious and something that is critical to be aware of. So 366 looks to be 369. 369 is actually the numbers of the universe. 369. Look up Nikola Tesla. He said 369 is very important. Anyway, 369, 366 is the looks like the all-time high for the stock. You know, dating back to basically 2004. So we have the all-time high, and we had a huge sell-off. So basically, there was this uptrend in place. So we can draw a trend line or a channel, whichever one you prefer. So you can draw a trend line, something like this. You drag it up, fit channel. That fits pretty good. You see that we hit the lows, went up to the highs, hit the lows, bounce, hit the highs, double top, broke through the channel, back tested for resistance, and then sold off. So that shows a change in character in the market. It's no longer technically in an uptrend. Long term, yes, depending on your time frame, this could just be all noise, depending on if you're holding for like 5, 8, 10 years. You know, it doesn't really matter. But in the meantime, you know, in the medium term, this is not a good sign where we had a break of the channel, retest for resistance, and we sold off. So that doesn't mean we're going to continue working our way down, but it's something to keep an eye on. So basically, we had a large move down. As you can see here, one large spike down. If you do a line chart, it'll be one move down. So one smooth leg down. So we had a smooth leg down, and then price corrected higher. So wherever it stopped at, it can begin the second leg down and start the second leg down. So we have the second leg down targeting 159. So that's the target that the bears are attempting to reach. However, you can see that the legs down now are a lot smaller than this big leg. So we had a huge move down, but look at, we have a leg down here, consolidation, second leg down. So this is the first attempt that failed, correction, second attempt. So the second attempt looks to be failing right at support. So that's why we're seeing a nice bounce up. So we can mark the support level. 231 is definitely a very strong support. You can see that we had a gap up, came back down, support, rallied up, support, and then support once again. So it is acting as a strong support at this level. So as of right now, I would say if we probably see a break of this trend line, let me go and draw a trend line. We draw this trend line across. Something like this, I would say keep an eye on this trend line here. If we break this downward trend line with conviction, I think there's a good chance we see higher prices. We're above the bullish trend line short term. Looks like we're coming back up, at least in the short term, probably to this micro range. In this whole context, there's a small little breakout right here. This is a range pattern. Looks like we're coming back up to the breakout pattern 258. So we'll probably see 258. We're in a bullish trend line. Earnings report just right around the corner as well. Looks like next week, Wednesday, after market close. So that's going to be a nice catalyst to drive up the price if we do get that. But if we're still below the trend line, then expect lower prices. However, with what I'm seeing on the chart, let me see. We want to analyze whatever's still relative, right? So we have, I think this is all one large leg up right here. Clone this arrow, second leg up. Basically a perfect mesh move target. So we have one massive leg up here, a big drop, second massive leg up, and then a big drop. So we did reach the measure target, so that's why we did find resistance at the 360s. We had a double top there, found resistance at the top of the channel. That was basically a bunch of clues telling you that the trend was probably going to end over here and lose steam. And that's exactly what happened. Large drop down, followed by a couple more smaller legs down, targeting the 160 level. Um, let's see what happens. I say bears are still in charge of this market until we probably see a break of this downward sloping trend line. That would be probably start to invalidate the downward move. And if we do see a break above 274, why 274? Because that is prior resistance. You can see there's some resistance here, a good amount as well. So if we see a break of the downward sloping trend line, and then that would be a very good sign for the bulls. And then if we could even break the 270s, that would be even a better sign. Most likely it will come all the way back up to the 360s. That's what you want to see. You want to see something like this. Break above, hold, something like that. You would want to see, a very strong break up higher through those two levels, because we can come up to the trend line, bottom of the range, 257, get rejected, come back down to lows, possibly break it this time. You could also go up, hit the top side of the range, continue trading sideways, and then go up higher, which will also be bullish, or hit the range and then get rejected again. So overall, it's bearish, but there's some exceptions in play. If you start breaking the trend line with conviction, if you break above 270s, I think there's a very good chance we go much higher from there. But what I see in the chart right now, it is showing signs of weakness by the bears that they're not able to reach the measure target. That's why we are seeing a temporary move up higher. This temporary move up higher can turn into something more long term, but you want to see first invalidation of these potential resistance zones at 258 and 270s. So let's see what happens for CRM. So let's monitor this short-term uptrend that we have that has been started basically on August 12th. If it starts dying off or shows signs of weakness, then like I said before, it's still bearish, right? The bears are still in charge of the market, and if we come back down to the 230s, there's a good chance it breaks this time to eventually reach the 259 level, or excuse me, 159 level. Let's take a look at the weekly chart. And you can see that we have 2 green weeks, 2 prior green weeks. This week is looking bullish so far. It's a bullish looking candle, only halfway through the week, but is somewhat bullish, looking like it's come back up to the 250s. And if we see continued strong momentum, this is what I mean by strong momentum. If you see something like this right here, so if we copy those bars, so if we see something like this, let me go ahead and do something better. Or let's just say something like this, these green bars right here. If you see something like this take place, that's what I mean when you see strong momentum. We broke through the trend line. We broke through that 275 level. You can have a new trend line form. So that is what you want to see to invalidate the bearish structure currently going on. Until then, this is still technically a bearish structure. We just hit a long-term measurement target. And looks like it could be due for a big drop. I think that's basically where the trend line is at too. There's a long-term trend line, maybe something like that. You could draw something like that, kind of right at that trend line as well. So as right now, I would say the bias is towards the downside with what I see in the chart. The bulls hit this prior level, and they were not able to drive it up that far. Sold off. We came back to the level. And the bulls have a second chance. Let's see if they want to ignite a new uptrend, or this is just going to be a short term to reverse back down. So I'd say the most likely situation is, a move up higher towards the 250, 259 level, and then finding resistance and then working our way down back to the 159 level. But again, things can always change in the market, and you have to be open for invalidation. If we see a strong break of the trend line, if you say, oh, wow, I didn't think the bulls are going to be able to do that much buying pressure and break the 250s. Okay, well, let's see if they can break the 270 now. Oh, wow, they did break the 270s. Okay, there's a good chance they're going to continue moving up the price higher because there's not a lot of resistance from the 270s back up till the all-time highs. You can see there was a sharp sell-off right here. So that's what I'm saying. If we can get through these minefields for the bulls, then it was going to most likely continue moving up higher. But, with how long this trend has been in play for, and with reaching a massive measure move target, it is a good chance that it's a bearish case plays out more likely. So let's see what happens. Earnings reports going to be probably a catalyst for higher or downward prices. And I'd say right now it's still leaning towards the downside. We need to see a decisive break of that downward sloping trend line, get above 250, 258, or 260, get above the 270s and stay above it. Even if we do break it, you don't want to see a fail breakout. You want to see price either hold it, or if it does break out, you want to see price continue moving up higher from there, not pulling back significantly. So that's all I have for CRM. Just to summarize, basically we hit a long-term measurable target. It was targeting the 360s. That's also at the top of the channel. So there were multiple indicators telling you that there's a good correction in play. We saw a huge drop lower, followed by a small bounce, leading to a potential second drop in the future. The second drop in the future is looking weak, looking like it's not trying to drop that far down. It's up to the buyers if they want to continue driving up the price. If they fail in the short term, then the bears are still in play, working towards the measured target. If the bulls are able to override this correction lower and have a strong rally up, then all bets are off for the bears. Bulls were able to take back the leadership or be the dominant player in the market and drive up the price. So let's see what happens for CRM. I would say, the critical levels are 260, 270, and the measuring target towards the downside is 160. Bullish target would be 366 if we can see a strong break above the 275 level. So all I have for CRM on the daily and weekly charts is a Vee Trades, and thank you for your time.